Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for June 25th, 2017. And I want to thank you all for listening in today for this video. Now, before we get started, I did want to mention one thing, and I haven't been doing this every week. And every week I keep reminding myself, hey, you got to remind traders to subscribe to this video, and make sure you click on the like button too, or the thumbs up, or whatever button it is at the bottom. Make sure you like it, and to continue to support us, continue to hit the subscribe button on YouTube, pass the video around, and also the best thing you could do to support us is become a subscriber of ForexAnalytix. It's only $1 for 10 days, so try it out. What do you got to lose? $1? Yeah, you spend more than that on pretty much everything nowadays. So try it out, see if you like it, see if it's for you. Okay, now I'm going to take you over to the analysis page, and really what I want to discuss for this next week is I want to discuss the stock market. All right, I want to take you to the stock market, and then I'm going to take you to the dollar. Now, you might say, well, Blake, this is a Forex video, so why are you focused on the stock market? Because the stock market has a lot to do with risk appetite and risk aversion. And if we start to see the stock market show some signs of weakness, then that might influence the FX market a certain way, especially with next week. Next week's going to be a fairly light calendar, so I'm kind of looking at finding what things might be moving the market. So let's start off with the S&P, and I'm going to take you over to the basic technical analysis chart, and I really want to take you over to the weekly chart really fast. Now, there's a weekly chart of the S&P, and what you'll notice is we're at what could be channel resistance up here. Now, if you look at the daily chart, we had a false breakout this week into all-time highs. We hit 161% extension. Now, we haven't started breaking down yet, but I think the risk is if this channel resistance is really that big of a deal, maybe we come down a bit. Now, I want to show you also the monthly chart that I posted earlier in the week, this last week. But take a look at, is it still there? Let me make sure it's still there. I removed the monthly chart. Okay, well, the monthly chart, I can just take you over this way. We can do it just like this. Take a look at the month here. Now, what's not on here is this is a 200-day moving average. Now, that's a monthly moving average, right? You can see pre-dot-com bubble, how far we were away from the 200-day moving average. Well, we are that same distance right now, within proximity. I always talk about the rubber band effect, and the rubber band effect is when you stretch that rubber band too far away from the 200-period moving average, because that's really the mean, okay, on any chart. We tend to snap back. So we're pretty far stretched here. That doesn't mean that the stock market's going to reverse today or tomorrow or this week or maybe next week, but I think we're getting close. So that's why we have to start paying attention to this type of stuff that's showing that the market might be topping. Now, we're at resistance here on the S&P, as I showed you on the weekly chart, but take a look at the DAX. The DAX is another chart that I want you guys to look at, just because the German stock market, it does matter. And here's the DAX right here. Let's take you over to the weekly chart, and we are at all-time highs on the DAX, but notice how we're overbought, or have been overbought. We're working off overbought conditions right now, but RSI doesn't get much higher than this, in recent years. And even when we were spiking way up here, I mean, that didn't last too long. We eventually fell. So as we're peaking up here in RSI, that's where recent peaks have been formed. Now, the weekly chart, I'm just showing you, this top resistance trend line. We're knocking our head up against it. But if you go over to the daily chart, notice the daily chart has an ascending wedge. Now, ascending wedges, they have a higher probability of breaking lower, and we're testing this trend line right now. So early next week, if the S&P starts to break, and S&P, by the way, I'm looking at 2430. I'm also looking at the German stock market, I mean, if we break below this trend line, and especially if we break the breakout point, which comes in at 12,400, things might take a little bit of a turn. Now we're in the month of June, which, you know, the summer months tend to be underperformance months for the market. So we could see a bit of a pullback. Now, does that mean that we're going to completely, you know, lose 20% of our value in our stock markets right now? Probably not, but you know, we have to watch that maybe this is a start of a pullback, which could end up being longer term. But even if it's just a 3, 4, 5% correction, could that have a big material impact on the FX market? It sure could. Now, the question is, what is it going to do to the dollar? And I got to take you over to the dollar index. And the dollar index, I'm going to show you the dollar, but then I'm going to show you just some other currency pairs that we don't necessarily follow normally, just because they happen to not be they happen not to be movers. But I'm going to show you a couple of charts that might, you know, have you wondering. Now here's the dollar index, and let's go over to the weekly chart. The weekly chart, this is what I call a broken chart. Okay, there's a couple things that are broken. First of all, a broken bullish trend. First of all, see this strong uptrend line, this lower red, you know, uptrend line. We broke below that a few weeks ago, a few weeks back. We snapped it, came down aggressively. We've been consolidating for the last 4 or 5 weeks at the 618 retracement. That's from the you know, the lows of 2016 to the highs of election night. We're at the 618. So, you know, naturally we're going to consolidate here. I think a lot of traders were expecting a bigger bounce, but what you'll notice if you go over to the daily chart, we actually rejected a pretty significant downtrend line. And so while we're below this blue trend line, you have to be careful with the dollar. You know, if we get back above this blue trend line that you see here on the dollar index, that would signal to me that the dollar's still trying to recover, and we might get a bigger recovery, maybe up towards, you know, 99 or maybe up to 99.50. But for right now, the dollar index is under a little bit of pressure, and we need to keep an eye on it. Now, like I said, I was going to take you over to a couple of other dollar pairs because I want to show you like some pairs that you may not necessarily follow so closely. Like, take a look at the US dollar Swedish krona. Let's go over to, that's a monthly chart. Let's go over to the weekly chart. Okay. Now this is the US dollar Swedish krona, and the US dollar Swedish krona has broken, like the dollar index, its uptrend line, long-standing multi-year uptrend line. We broke that a few weeks back. Now we haven't broken down much. Matter of fact, we've been kind of grinding higher. But the fact that we just keep rejecting the underside of this trend line does have me concerned. Well, for dollar bulls anyway. So you got to watch the dollar index, because if you, the Swedish krona rather, because if you see the underside of this, there's a lot of air below here. If the dollar wants to pull back against the Swedish krona. Now also take a look at the, since we're staying with Nordic currencies, take a look at the Norwegian krona. The Norwegian krona, or the Norwegian crown, however you want to look at it. You see how we have this strong uptrend right here? Okay. We've had a really difficult time getting back above that. Now this last week, the Norges Central Bank met, and they were unexpectedly hawkish, which if you look at the weekly candle here, I mean, we came down pretty hard this week. You can go over to the daily chart. You can see how we came down the last few days following the Norges Central Bank. Now, this isn't a big deal in the grand scheme of things if you go over to the weekly chart, but what is a big deal is that the chart's actually broken here. We're broken, all right? Now, if you take a look at some of the other dollar pairs, like, you know, the dollar Canadian, I mean, the dollar Canadian, I have maybe some near-term trend lines on weekly charts here, but let's take a look at the longer-term stuff. You know, we may have had a little bit of a recovery, but really this trend line is broken on a weekly chart on the US dollar Canadian. You look at the dollar Swiss, the Swissy, again, this is a weekly chart. See this trend line right here? Yeah, we're broken there too. All right. So I know most of you guys focus on the euro, the pound, maybe you look at the Aussie or the Kiwi. And speaking of, like the Aussie and the Kiwi, I mean, the Kiwi's testing some pretty cool, pretty big resistance this week. And the Aussie is in a, quite possibly a bullish wedge pattern here. I know we're mid-range at the moment, but, you take a look around, the rest of the dollar pairs tell us a different story than like if you're looking at the pound or the euro, or maybe even the dollar yen. But if you look at some of these other dollar pairs, the dollar looks vulnerable. And if the dollar is looking vulnerable, what happens if risk aversion kicks in? And we start to see the stock market sell off, the DAX, the S&P. Does that affect the dollar negatively? Or does the dollar become bought as people start looking for safe haven type of trades? I don't know the answer to that question. It's been so long since the stock market's had any type of meaningful correction. We don't really know what the dollar is going to do. But as of right now, the dollar, does look a little vulnerable. So we need to keep an eye on it closely as we go into next week. Now, next week, there isn't a whole lot happening. We have a lot of central bankers speaking. We have Mario Draghi speaking on Monday and on Tuesday. On Tuesday, Bank of England's Carney speaks. We have Janet Yellen speaks also on Tuesday. Bank of Canada Polas speaks on Wednesday. Mario Draghi speaks again from the ECB on Wednesday. Carney and Kuroda from the BOJ speak on Wednesday. And then we have final GDP on Thursday in the US, and then Canadian GDP at the very end of the week on Friday. So we're kind of lacking in data, so we might need to focus on correlations a bit. And I have to say before I go, gold and silver have had some pretty nice recoveries this last week that should be watched, because if people are looking for safe places to put their money, and if it's not going to go in the dollar, it could go into precious metals as well. Anyway, folks, that's your week ahead video for next week on June 25th and beyond. My name is Blake Morrow. You've been listening to ForexAnalytix video. Remember, don't forget to click the subscribe button on the YouTube channel, and also like this video if you can. Have a great week. I'll see you on the daily FACE webinars this coming week. Thank you.